Anna Karenina. I'll never get it. I just never will. Tolstoy. So anyway, but if you take that in the investing world, I feel like it's all happy portfolios are different. All unhappy portfolios are unhappy in the exact same way.
With leverage.
This podcast contains the arguably witty banter of two friends, Skippy and Doogles, that like to debate about investing. The content is intended to be entertaining and for informational purposes only, not investment advice. You should do your own research and consult a financial professional before using any of the information in this podcast, and especially before investing.
What it is, yo? What's up? Welcome back, everybody. Skippy and Doogles Talk Investing. So excited to be here with you all, as always. This is going to be a debt-ridden episode. To be clear, the episode itself has no debt, but we will be talking about the disadvantages of debt as we go through here with some real cautionary tales and some potential cautionary tales. So we know that's exciting. So that's why we're always trying to bring debt to y'all.
To be clear, my portfolio has no debt too. I just want to get that out there. Yeah.
None of your companies have any debt.
My portfolio is situationally aware.
Oh, you just snuck that right in there. I already previewed it it's all about debt. We're going to bring you a couple scenarios. Don't have to get into more specifics of them. Before we get into your situationally aware debtness, I want to drop this line. So about a week ago, Ben Carson wrote this piece on his blog. And in that piece, he discusses debt a little bit. The name of the piece is Investing in the Boom Times. So he's saying, like, what happens with people when they invest during times that are pretty boom-worthy like we have today. Just one line from this. Rule number 1 when investing during boom times is do not put yourself in a position to become a forced seller when the good times come to an end. Is that foreshadowing? It might be.
People are just so stupid, man. I don't know how else to say it. Everyone wants... I'm going to pull something up. Do you know how FIFA tried to raise $20 billion this week? I didn't want to talk about this.
The most obvious bad idea of this week.
For those who don't know, FIFA is an international soccer organization that claims to be a nonprofit. Nonprofits somehow can sell equity at values? Like
Okay, first of all, bruh man called Sam Altman.
What?
It said, I heard he was like, I heard you ran a nonprofit that raised equity.
I'll try not to get too deep in the weeds. But there's this culture, and it's maybe the height of the bubble. I hate being a person that calls everything a bubble all the time, but no one is willing to play the long game, to build a great business, to slowly get better over decades. There will be plenty of money at the end of the rainbow, right? Everyone wants a shortcut to everything right now. So much so that nonprofits are selling equity.
Yeah.
It's not even yours to sell. The plan spectacularly blew up in their face. It's not going to happen. Of course, it's not going to happen. But that is just the culture of what's happening right now.
It becomes so there's the whole bubbleiciousness that's going on right now. And it is so front and center. Seeing other people, like the quote-unquote Joneses, seeing other people that are making money so fast. And I think humans, it's really hard for humans to sit back and watch that occur and see potential money that's like just right in front of your face. It's not like it's some hidden game, right, where you're trying to figure out where the money is. No, it's like sitting right in front of you. People are doing it. People are saying you could do it. It's just really hard to deny that. And coming off the World Cup, my boy Infantino, coming off the World Cup, who runs FIFA, is saying like, oh my goodness, there's this momentum that's going right now. The World Cup itself was filled with corruption, which is not the first time, but like it was, again, very front and center. And so it's like, do it, man. Sometimes he probably went back and watched Carrie Strug perform that great vault back in 1996 with Gloria Estefan singing in the background.
This is this is the worst investing podcast there is. Carrie Strug. Carrie Strug. This is amazing.
All right, let's get back to it.
No, he probably said, there's an Infantino amount of money available to me right now.
Oh, that was good. That was good. I like that.
So you sent me an article about a hedge fund called Situational Awareness. led by a 24-year-old. I could have read that much and told you the thing blew up. A 24-year-old runs a hedge fund called Situational Awareness. This is a whiz kid named Leopold. You want to take a shot at his last name? I haven't consumed this. I haven't heard someone else say it.
Aschenbrenner? That's what I guess.
There we go. Leopold Aschenbrenner. Deep breaths. This whole article from the New York Times feels like I was on a version of Punk'd. Like it just feels like a joke of this is how you make a hedge fund that's sure to go bust. And the part when I died, like I fell over laughing reading this, is when the whiz kid who started college at 15, turned down Yale Law School, blah, 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 decided he had to go work for FTX, the crypto exchange.
Yeah. Which did what?
Kid was briefly, he headed their philanthropic arm, right?
Okay. It gets no better.
The whiz kid also got fired from OpenAI. Like, this background is unbelievable. It's a joke, but apparently this is real life.
It is. And to the point of where we started this whole thing, he's obviously an intelligent human being.
Yep, 100%.
Graduates high school at 15, goes to Columbia, graduates from Columbia valedictorian, smart guy. If you think about this with a long-term lens, you're like, I have a phenomenal platform on which to build my future over the next 50 years, 30 years, whatever, just to use decades. Instead, what happens?
All right, so on the hedge fund side, after he gets fired from OpenAI, he writes this essay that catches fire in the valley called Situational Awareness. Again, did Mike Judge write this all because naming your hedge fund situational awareness and blowing up is just too funny? Like, it lacks situational awareness. But his general belief is artificial intelligence is coming, and it's coming quicker than everyone realizes. AGI will be here in no time, and I'm just going to plow money into that. He's made spectacular returns. According to this article, and I don't think anyone knows the exact numbers, but he raised around $100 million from big tech names. Yep. We know how this happens, Doogles, but like, that could be 2 checks. It could be 10 checks. It could be 100 checks. I don't know. But this article, because it is the New York Times, does detail the cold reception he received in New York. And it has some hedge fund or some asset allocators on the record saying, when we asked the dude about what happened if his hypothesis was wrong, he had no answers. And he generally seemed to believe there was only one outcome here, which is scary in the investing world. Like, this is how people blow up. But here's the part I need to get to. Truly spectacular performance over the last couple of years. That $100 million went as high as $30 billion.
Including leverage.
True. Including, we're getting to leverage.
I know, but the way you just stated it, it sounds like it was all returns, which it was not. There's more money that came in.
And I think this is ultimately where we're going to get, is maybe you had some inside information. I mean, you worked at OpenAI. Maybe you had a good Rolodex. Clearly, for at least a short period of time, you had a decent hypothesis. Why did you need leverage and shorts and options and 1,000 other things that are a surefire way for this to eventually blow up in your face? Effectively, last month, the month of July, the value of hedge fund went down something along the lines of 67%. Then he had to sell the only liquid parts of his fund, the public equities investments, at a steep discount to Citadel, just to survive another day, like just to not be bankrupt. I just don't understand why. I mean, and maybe I'm just like too old these days, because I knew this was going to blow up that way, because anytime you make money this quickly, you lose money just as quickly.
Yes. And this, I feel like this is kind of like the reverse of the beginning of Anna Karenina. You know the book I'm talking about? Karenina. There you go. I was like, it doesn't sound right, but it sounds like the letters are right. So I was like, anyway. So all happy families are like, all unhappy families are unhappy in their own way. That's the beginning of Anna Karenina. Karenina. I'll never get it. I just never will. Tolstoy. Okay, so anyway, but if you take that in the investing world, I feel like it's all happy portfolios are different. All unhappy portfolios are unhappy in the exact same way.
With leverage.
Leverage. It comes down to if you look at why anything blows up, I don't mean just goes poorly, because you could just make bad investments, but like blows up in spectacular, implosive fashion. Leverage is involved nearly 100% of the time. Nearly 100% of the time, leverage is involved because people start to get greedy, like we talked about at the beginning. In this case, it was nearly all leverage, it seems, whether it was through borrowing or you can also call options leverage because you have to have a margin account, right, in order for options to happen at the same time. So I'll let you continue, but I just had to
and shorts, etc. I mean, we're going to do a follow-up on Inside the Trade that we did 4 weeks ago, and one of the stocks we talked about there is Adobe, but I have to read a few paragraphs from this article because it's just too funny. So it talks about his monster bets against many companies like Adobe that the fund thought would be replaced by AI now suddenly appeared stronger than another. So he's saying Adobe will ultimately not exist, right? That's one of his shorts. Yeah. Maybe that's true. It's not true tomorrow. How could you? Adobe has long-term contracts. Adobe has significant revenue growth. Adobe has a great balance sheet. Like, I don't know what's going to happen to Adobe in 20 years, but I could tell you betting on Adobe to immediately go down like by the end of 2027 or whatever his hypothesis is incredibly short-sighted. And I think it speaks to, go ahead.
And according to this piece, it sounds like he was labeling that as a hedge. So a hedge by definition is when you're protecting against you're hedging against a different investment that you have. So if on one side, on the long side, when you're betting for something to go up, on the long side, if you have the newfangled AI-ness, right? Mm-hmm. What AI is going to be in the future, that's your long side. And then you say to protect against that, I'm going to bet against what would happen if my first thing was right.
It's the opposite of a hedge. It's more leverage.
It's more like that's all it is.
So because his long positions are AI companies or power companies that he thinks will power data centers for AI. Like, so it's all the same bet. And I hope he knew that. It's funny, in his letter to investors that's now public, there's a lot of our risk team is going to have a look at this. And I just go, dude, you never had a risk team and you still don't have a risk team. Like, you don't even know what risk is. Let me read the paragraph that wraps it all up. So the article talks about the company surviving. And it says, one person briefed on what remains said that roughly $8 billion is left, down from $30 billion at the start of July. Okay, that's 30 days, people. It's $22 billion in 30 days. Granted, with a lot of leverage. Most of that is private stakes in companies such as Anthropic, right? So he had some early private shares in the hottest company in the world. Good for you. That's it.
Yep.
Easy trade to go up over the last 18 months. And the firm has wide latitude to value and may or may not be what the firm hopes. Tons of leverage. Performance was great. They sold all the stuff that has a true value. A lot of that stuff that had a true value was Cathie Wood. It was these tiny stocks where they were the only buyer. So there's no like selling pressure. So that's not really truly valued. And then the stuff that remains in their portfolio is non-liquid, and they are marking the marks.
Yes.
This fund is not worth $8 billion. No chance.
No. He has got to be right now, first of all, I'd say in some kind of a state of panic. The issue is, and this is not a question of his intelligence, again, very smart guy, but more, I think, from experience, he probably doesn't fully understand why he's even panicking. He just knows that things are going not quite well. But to be in a situation where I am sitting, I'm just going to say exactly what you just said, but put it on myself and say it in a different way, slightly different way. In a situation where everything that someone else can tell me what the value is has gone to crap, and everything that I am the one that says how valuable it is looks great, is the ultimate emperor's new clothes delusional situation. Like, how wild is that? And there are probably people that are cool with it. That's like the bigger issue for me. that I am perpetually confused by this, but I've seen it firsthand. So it's not like confused as in, does this really exist? Because I've seen this firsthand. Perpetually confused by how people buy into and invest in things like this.
Oh, there's no rhyme or reason.
I'm not questioning their intelligence or anything like that, because it happens again and again, and smart people do it. I just don't understand it.
No, I mean, effectively, let's connect the dots here. Some people read an essay and wrote a $30 million check. That's all that happened.
Yep.
With someone who had no background in investing, just happened to be a smart dude. Leopold, I'm sure you're a smart dude. Investing has a way of humbling people. The smartest people almost never perform the best. And 24, 25-year-olds never have a career without any turbulence and ride off into the sunset. Like, that's not what investing does. So no doubt he's a really smart dude. This, just from afar, like, was so obviously doomed to fail. There's still a chance to kind of save face. I mean, I would hope at the end of the day, 10 years from now, none of his investors actually lose. No, I'm trying to be nice.
With your
Let
face
me be nice.
Leopold, if you want some free career advice, I'm happy to give it to you. Honestly. Because right now, if you look at the first, what is this? Let's call it 5 years or so, maybe a little more of his career. The way I would summarize it is phenomenal inputs and awful outputs. That's the only way to summarize it. And that's not a good trend to continue. So here's what I mean. Phenomenal input, valedictorian at Columbia. Great.
Yeah.
What do you do with it? I'm going to follow up with another phenomenal input. I'm going to go to lead something at FTX, this like potential starling darling. What's the result? Lose all my money. Okay, cool. Let's do another phenomenal input. I'm going to go become a researcher at OpenAI, which is like a next big thing for future of technology. Yep. Awesome input. What's the output? You get fired for leaking information. Okay, that's a pretty awful output. Next input, I'm going to raise $100 million to start my own hedge fund at the age of 22. Phenomenal input. What's the output? I lost about 80% of my money in 1 month. Like, you have got to, I'm not even trying to be mean. These are just the facts. You've got to think more about how a little bit of, it doesn't have to be slow and steady. It could be, because of your potential like horsepower, it could be medium and steady. Like, you can go a little bit more than other people. Just don't go for it all at once.
It's so lovely that you've turned into the mean one on the podcast. That is pretty direct. You're not a huge fan of this guy.
You know me. I'm not going to throw people under the bus. But if you are laying under the bus, I will point to you and tell other people that you're under the bus.
Well, listen, I just realized we planned on doing the Inside the Trade follow-up at the end of the show, but it almost directly ties to this in a way that I didn't realize. You want to squeeze that in now?
Oh, sure. Let's do it.
All right. So for those who don't know, premium listeners that support the show at skippydoogles.supercast.com will often get little extra tidbits at the end of episodes if we're doing deep research or looking at stocks or whatever, right? And I came about 4 weeks ago with 5 names that I just said, Doogles, I don't know. I mean, you can go back and listen to the episode if you want. I said, I don't know about these. I don't think they all perform well, but I think as a basket of 5 stocks, they're kind of interesting, right?
Yeah, that's right.
And the names were Adobe, funny. Our boy Leopold was betting against this. Intuit, CRM, which is Salesforce. Then 2 wild cards: Accenture, the consulting company with 800,000 employees, and H&R Block. And you'd have to go listen to the premium episodes to figure out why they don't make any sense without some tellings. That portfolio in the past month, and this was from the middle of last week that I pulled the 1 month return, on average did 28% in 4 weeks, right?
Okay.
That portfolio
as compared to Leopold,
which went down 80%.
Yeah. Okay. All right.
Sorry, it's only high 60s%, but whatever.
Yeah.
This is fascinating. The reason I want to mention this is because people talk about this with value stocks a lot, and at this point in the game, almost all these stocks would be considered value stocks. a lot of times you'll do nothing for years, or you'll go down for months or years at a time. And then sometimes when it pops spectacularly in a matter of days and weeks. This is exactly why the short didn't work out for Leopold, right? Yep. Adobe finally went crazy. Now, go back and look at Adobe's 3-year returns. They're terrible, right? Again, I don't know what happens to Adobe 10 years from now. But it was really weird that this catalyst of events happened between the Iran war, between some cloudiness in the AI bubble, whatever we're calling it, and everything else. And this money flooded to these names that were historically cheap. Like almost all these names were at 5-ish year lows, right? And it just happened overnight. That's all there is to it from my perspective. It's just fascinating to see the market kind of explode this way. And it makes me wonder when Leopold 2.0 or when the AI pullback happens for real, because everyone's getting margin called, not just the Situational Awareness hedge fund, exactly how dynamic the movements will be. Because I think it's hard to reconcile some of the movements, some of the big movements that happened in a very short period of time in July.
It's not even July. I'd say the last 3 months. If you take each month on its own, there's wildness that has occurred. The volatility for stocks that I would ordinarily say are not that volatile.
Yes, that's what I'm trying to say. Thank you.
Has been quite wild. Adobe still fascinates me. So as people that are longtime listeners know, and as you know, the core of my portfolio is long trend momentum. That's what I call it. Mm-hmm. These are predominantly growth stocks, like big time growth stocks. I sold Adobe, I can't remember exactly when. It was either like beginning of 2021 or beginning of 2022, something like that.
Yeah.
It's like owned Adobe, sold Adobe. So it was a part of that. Within 4 years or 5 years, Adobe has now become a value stock. That is like that's nothing but wildness. And it's because their fundamentals have continued to increase.
Well, and a value stock who's still has significant revenue growth. Like,
that's what I mean.
All the financials are so much better than they were in 2021 when you sold.
Yeah.
So much better.
So much better.
Not even the same company from that perspective, but the thoughts on the terminal value, meaning what people think the future holds for the stock. It's just people basically think the stock's going to zero.
There's some material percentage of probability that people have that the stock will go to zero, and it's discounted by basically that amount off of what its value might be if they didn't believe that. And so it's probably like a 40% discount or something like that. And whatever it is, I'm making up a number, pulling out of the top of my head, but it's wild.
Yeah. And so stocks like that portfolio of 5 going up on average of about 28% in a 4-ish week period is bonkers. Like, that doesn't happen unless we're talking OpenAI and Anthropic. Like, that's 1 month. Annualize those returns, people. Obviously, they're not gonna go up 30% next month, right? It's a one-time flash in the pan thing. But it just was really interesting from a spectator seat of going, we just talked about these stocks. They're interesting for a reason. And apparently, Ken Griffin at Citadel listens to the show and threw billions of dollars behind it. I don't know what happened, dude. That was a joke, by the way.
No, that's me. That dude makes money off anything, though. Citadel just made money. Like, we don't have to go down that. That's a whole nother road. Okay, you want to transition?
Yes.
Reaching the fishbowl, we are now going to talk about Oracle, which we discussed. Was that last September? Yeah, that was last September, which we'll touch on that in the timeline, where we went when Oracle announced a big deal with OpenAI, which we will touch on a little bit here. Stock pops up a bunch, and we went, what? This ain't going to turn out well. Anyway, let's figure out how we got here. So I'm going to first go through, it's a long list, but I think I got to do it. I'm trying to hit it quick. I want to go through just a timeline so people can get the context of the timeline of Oracle over the last few years. To go back even further than that, for those that are not familiar with Oracle as a company, it was founded in the late 1970s. Larry Ellison was running this thing for a long time, and he has a big, bold personality. I'll say that. For about 20 years, I'll put it, they built themselves up as a storage business for data. Because what Larry Ellison saw was, he said, there's this whole information technology situation with all these computers that are coming up. People are going to have to store and retrieve their data from somewhere. If we could be the organizing force behind it, How awesome would that be? So, and this is all in physical infrastructure, right? If you think about this. So first 20 years, that's what it was. Then Larry Ellison sees that the internet is becoming huge. And so he makes a big shift in Oracle, a big bet that the internet's going to be the future, that Oracle can be at the center of that, still using their same infrastructure. Think about Salesforce before Salesforce was started. There's actually even more because Salesforce basically came out of Oracle. But anyway, so if you think about that, so he makes that shift, huge bet on the company. It works out. Okay, that's history, just so you get a sense for what Oracle is and what Larry Ellison is willing to bet on.
I mean, you're just trying to say he's always making the bet on the next thing. Correct?
He's always making the bet on the next thing, right? Then about 10 years ago, in 2014, I think it was 2014, I didn't write that date down, but somewhere around there, he steps down as CEO of Oracle. Larry Ellison's like, my time's up, people. He's like 70 years old. It's time. He was kind of in the background, buying Hawaiian Islands. You see him with his partner, who's a Chinese national, hanging out, being awesome, watching tennis games. Like, he's just living his life. This is what Larry Ellison's doing. Now for the timeline, the real timeline. November 2022, ChatGPT releases million users really quickly, 100 million users really quickly. And when that happens, Ellison says, hold up, this AI thing looks so much like in the late 90s when I saw that the internet was the big bet. He comes out of his, I don't know if he was fully retired, but I'm going to say he came out of his retirement and he says, I'm coming back in. Put me back in, coach, because it's my time to shine. And Ellison owns a huge part of Oracle, by the way. So when I say put me in, coach, he just says like, I am now coach. That's really what he's able to do.
I own you and I will do whatever I want.
Exactly. So now he comes back in mid 2023 with his Oracle folks. He publicly commits that Oracle is now going to be in AI. He calls it the most important technology ever, outlines this strategy, which is about massive data centers. And we are going to be the company that is going to have these massive data centers coming off the fact that we've done this for cloud infrastructure. Like, we've shown that we can do this. Now we can do this for the AI boom. Cool. Late 2023, the government, this is the Biden administration at this point, what the Biden administration's take on AI, the center of it, was that they saw AI as a national security issue. So if we can own AI as a country and protect the ownership of AI from other countries, specifically China and the Middle East, that is an important national security issue. So that was like the core of what the Biden administration did. So what they were coming out and saying was, they went, we don't want people building massive data centers overseas. We want to be able to protect that data. We don't want to be fueling other people's AI. So they created a more bureaucratic process for companies like Oracle that were looking to build or were building massive data centers overseas to be able to do that. Ellison did not like this. Many technology leaders did not like this. They saw it as overly bureaucratic. So Ellison's like, okay, crap. What am I going to do? I'm going to fast forward a little bit. Now let's come into 2024. Donald Trump is running. Larry Ellison was a Donald Trump supporter after 2020. And at this point, Trump is like, his take is much less, in many, many ways, much less bureaucratic. I mean, as we all know, like you do your thing, rip apart all of the Biden administration AI bills if I get elected. So Ellison supports him. Larry Ellison and Oracle become part owners in ByteDance, and we all know the dance that happened there with ByteDance, with TikTok and everything. Okay, fast forward again. Trump comes into power. Ellison and Trump start working together. I'm using that in quotes. I don't mean like they're in cahoots. It's just like there's a lot of support there to ripping apart that Biden administration policy. Trump does it right before it was really going to go into effect. He can now build out the Malaysian data centers further that he wanted to, and others. It's great. All right. January 2026. Ellison then moves deeper into TikTok. So at this point, let's see. Oh, yeah. The administration announces a joint venture led by Oracle and other investors to acquire a majority stake in TikTok's operations. So now he's got a TikTok ops. He's got his data center ops.
I mean, this is the same, right? Isn't the text message between Musk and Ellison famous where he's like, do you want to buy some of Twitter when Elon Musk is raising? And Ellison's like, yeah. And he's like, what are you thinking? And I think he came back and said like $2 billion, right? This is a guy that's spending billions of dollars over text.
Yeah.
I imagine this is the same. Like Trump is hitting Ellison up like, hey, I'm going to sell you TikTok. Like, you got a couple billion laying around. So that's just how this has to have happened in my eyes.
Yeah.
It's a text message.
Yep. It's got to be like that. And so that's a bunch of the timeline. There's also the piece that I skipped in here because I said it earlier, where last fall there was a huge deal between OpenAI and Oracle on funding. And basically what's happening in this time period is Oracle is taking out massive, massive amounts of debt, which we can touch on in a moment. And the way that it's taking out that debt is it's creating contracts for future funding to come its way, like future revenue to come its way, so it could leverage those contracts to then take out debt, to build out infrastructures, to build out computing power. So it's a huge bet, just like he did in the 1990s. It's a huge bet to say, if this works, we are going to be one of the companies, the hyperscaler companies that are building out the infrastructure, that will be at the center of it. If this does not work, much like our friend Leopold, we don't have much of another plan.
Well, it just seems like, I think this is why you gave the timeline. It seems like he's ridiculously wealthy, right?
Yeah.
But his plan for the past 40 years has been to find the next thing, go all in on it, and it's effectively a coin flip, right? I'm sure he doesn't feel like it's a coin flip because he feels like there's a lot of hard work and a lot of brilliance on his end. But I think he's succeeded through the last few coin flips, and now this is, in a way, it's so related to Leopold, right? Like, I think you can make a similar bet without as much debt, so the company's future doesn't hang in the balance. I truly feel like the company's future hangs in the balance. Not from a, like, you know, it can turn into an AOL type thing where you eventually are 1/100th of your size and the name still exists, but you're not really a company anymore. Like Oracle will be around, but I don't. If this fails, it's going to fail spectacularly.
Yeah, let's talk about that. So, in the last fiscal year, Oracle had a little under $70 billion in revenue. I'm just going to use revenue as you can use the proxy for the rest of it. Okay. $70 billion. Here's some of the numbers that we're talking about. So Oracle and the partners that it was working with in the Project Stargate, which is a part of what that OpenAI thing was a piece of, they proposed investing as much as $500 billion over 4 years. Okay. Mm-hmm. The OpenAI contract, OpenAI was reportedly, they agreed to pay $300 billion to Oracle. This is what we talked about last fall. $300 billion to Oracle over 5 years. $60 billion annually. So that's, like, as we mentioned last fall, basically Oracle's annual revenue every year is what's being proposed from a company that makes negative money. Okay. There's this Texas facility that they agreed to build for Elon Musk, where Oracle is committing to pay $1 billion annually for 15 years, so $15 billion off of that. Elon pulled out of that contract, by the way. Mm-hmm. Oracle is working on a $6.5 billion Malaysian data center, a $7 billion Wisconsin situation. So when you start putting all this stuff together, I'm throwing out a bunch of numbers. Oracle's debt got to about $130 billion as of this summer. $60 billion in 67, I think, billion dollars in revenue annually. So their debt to equity ratio was about 500%. When you look at some of the other companies that are spending gobs of money on capital expenditure, which is coming out in the news all the time. Let's take Amazon, for example. Amazon's debt to equity ratio is 50%. And that is high for them. Not necessarily for any company. That is high for them. 500%. Oracle issued $25 billion in bonds in one day. I'm just throwing all these numbers so that you can get a sense for the level of bet that we're talking about. Oracle's debt is basically in junk status at this point. For a company like Oracle, it's just wild.
I mean, I haven't done the whole financial piece. I haven't looked at in 12 months. But yes, that they have a significant amount of leverage, right? They have more leverage than their so-called peers of Google, Amazon, whoever you want to call a hyperscaler, right? And this is also what we chatted about a year ago. They are relying on future revenue obligations from companies like OpenAI that don't make any money, right?
Yeah. Mm-hmm.
In a market that seems to be getting more and more competitive, specifically as it relates to the Chinese open source models that are now close to the U.S. models that are much costlier. So what does this ultimately mean? I mean, I kind of hear you making the same conclusion that you made 12 months ago.
You mean when I said this is different than what you said a moment ago. My bet would be that Oracle may not be a company in the next 5 years.
You've been on that train for a while.
Yeah, I've been on that train for a little bit. Yeah, it's hard to predict, as we always say, exactly what's going to come from this. The question is, what are the probabilities? And this is one of those cases where they've gotten themselves in such a situation that the probabilities do not look great, especially in this context. Who is at the center of this whole thing? This is one of the things that scares me about okay.
I don't know. Who is it? Ellison? Who are you saying?
Yes. Ellison at the center of this whole thing. Okay. The man is in his 80s. If Ellison is not around, this 100% does not work. Like, that does not mean that Oracle goes under, by the way. But I think you'd have to unwind it. Like, it's reliant upon Ellison or someone very similar, which there's very few people like that, to drive this forward. And the company has gotten itself into such a position that there is like a single point of, I'm not going to say failure, but a single point of significant decline. Can you imagine what happens to Oracle stock if Ellison were to, and I hope this does not occur, but if he, instead of watching tennis, decide to try and play one day?
Yeah, I mean, okay, hold on. You're going to get mad at me, so get ready.
Okay, I like it.
This has turned in, like, this is not really about Oracle. This is about Ellison. What if I believe he's acting rationally?
It depends on your definition of rational. I think according to, if you're saying
he's bored.
Logically.
I think he has all the money. No, I think he's bored. I think he has all the money in the world. I think this is a fun blackjack game, and he doesn't care.
No.
Because he's not going to be around for it to blow up.
Okay. Here's the one place. If this were just Oracle, I think I'd agree.
What do you mean? It is just Oracle.
No.
Sure, they're signed contracts with other people, but...
I think he is acting highly irrationally for the same reason that you just stated. While he's doing all this, right, he has chalked up all in on the Oracle stuff. He's also telling his son that he'll give him $50 billion to buy a media company.
But that doesn't matter. Who cares? The biography is more fun if it blows up on the way out the door. Dude, this is... If
it's not rational. That's not rational, is all I'm saying.
It is rational from his perspective. He's already made some huge bets and they've worked out. And he owns his own private island and his own sailing team and 1,000 other things. Like, he doesn't care. This is skin in the game. This is having some fun.
We can take the same inputs and come to a different output. I don't think that Ellison in the late 90s, when he made that other bet, would be also trying to fund his son's, like half of his son's media purchase. He would be all Oracle all the time. He is leveraging the future of the company that is dependent on him being a part of it when he knows he won't be. That is not a rational thing. That's a time bound thing. It's kind of like when if you put the time variable on things, it changes whether or not something ends up being rational. Like,
sure.
If I give you a deadline, if I give you a sales deadline, you have to sell $1 million worth of stuff in a month. Your actions that could be deemed rational, if there wasn't that, would become irrational because you're trying to hit something in a month. I think his timeline changes that. Yeah. I think that changes things. But more power to him. The man can do it. Like, to your point also, it's like,
but who else could do this? Goes into your history of he retired, then we have to assume that was kind of boring. He came back in. There's an exciting new technology. Founders of Google have effectively done this too. Like, it's more fun to be in the middle of the action than sitting as a bystander. And then he believes this is the future, so he's put all his chips in. And it doesn't matter for him. Again, it might matter for his son or his family, but I don't think he's thinking about that right now. I think he's taking a huge bet. let's put it this way. I will not be an investor in Oracle stock, okay, for the next 20 years. And maybe
Absolutely
in bankruptcy proceedings, I would consider. But
well, here's another prediction. No one will be an investor in Oracle stock for the next 20 years.
You don't have to be so... It comes across as rude, Doogles. You don't have to be so rude.
I know, but it's more fun that way. It's more fun that
seems
way.
Unlikely. But I think he's... I don't know how to say it other than, like... I don't mean exactly this. Kind of bored. It's fun to be in the action.
Yeah.
That's what I think is
that.
happening. I think the company will probably suffer significantly because of it, but I think that's what's happening here.
Yeah, and I hope it doesn't. Like, in all the rudeness that I'm throwing out here, if he does pull this off and all the things I'm saying are wrong, incredible. Like, absolutely incredible. The odds are so stacked against him, which makes that incredible. If you don't have that as the backdrop of odds stacked against you, incredible. My age point from earlier is, again, I think he's one of the few people in the world that could pull this off. So I hope that he is doing his jumping jacks, or not if he shouldn't be. Whatever he needs to do to be able to stay mentally healthy to push this stuff forward, like, I hope he's doing it, because he is one of the few people that could pull this off. It's a scary situation.
One of the fascinating things on the flip side, and then we can wrap, is that demand for compute, I'm just going to call it, and this relates to data centers, so far has proved fairly fungible. And what I mean by that is like Musk with XAI, and to a certain extent Meta, they don't have the best AI models right now, but they did build some compute. And so, like, they've been able to quickly sell that excess capacity to someone like Anthropic when Anthropic has the hottest model. And so does that mean that everything works out perfectly for Oracle 5 years from now? Probably not. But does it also mean that if OpenAI, who they signed the huge contract with, actually can't fulfill those obligations, they might be able to find someone else with the hottest model that needs that compute to at least bring some revenue in the door? Potentially. Like, I don't know.
Yeah, you're right. The other big if that sits in there is that compute stays at these prices. Because when you're in a situation, I've told, I think, on this podcast, the story of when I was working at a company. This was in the knots of gaming, the late knots in gaming, where we were crushing before this point. And there came a point that we had fixed costs in games. And the fixed costs worked because of the revenue that was coming on the other side. So we were like, our costs are fixed. Our revenue's so variable and high. This is great. Then games went free.
You still had those fixed costs, didn't you?
And we still had the fixed costs. And then things were crap. This is a situation in which no matter what, right? Oracle has, what did I say? $130 billion in debt that is going to be $130 billion. That's what it's going to be. If the unit revenue changes on the other side for them coming in, which it's so expensive right now that we all know it'll get cheaper. We don't know how much cheaper. 10%, 20%, 30%, 40%, 100%? I don't know. It will get cheaper. The math starts to become really interesting. That doesn't mean who knows what'll happen, and just like that's one of the other risks.
Yeah, it's fair. There's a constraint in compute right now. My son was looking at gaming PCs. He purchased one 2 years ago. To buy the same thing today, it's twice as much money. I'm not talking the new version of that. I'm talking the same thing, because processing power, RAM, everything is significantly constrained.
Well, why didn't he buy it before and then sell it?
He did. He can sell it if he wants to. But here's the problem. When that happens, when prices double, people will build.
Yes.
There will be overcapacity at some point in the future. We just don't know when that is. There's demand for it at the moment.
That's right.
All right. Anything else on this crazy long article that you want to mention?
No, I think we hit on the main points. It is long. It is an interesting. We only hit on the main points as it talked about Oracle, which was the core of this article. But it's an interesting read overall, because you can see how complex this stuff actually ends up getting. All the players that are involved, some of the thought processes, according to the New York Times, of course, was their investigation. But I found it to be like an interesting little web.
Yeah, I say go just for the sailing pictures. This man
All right.
drives a mean boat. What can I say?
Oh, yeah, and he's got his sailing. Come on, man. I forgot about their
That's what I'm
sailing
talking
stuff.
about.
That's pretty cool, yeah.
All right, that's it for this week. Send listener mail, including reactions to our takes here, to skippydoogles@gmail.com. Again, if you want to support the show, feel free to do so. skippydoogles@supercast.com. And we'll talk to you next week.
Thank you.